Hello and welcome to Crux Investor. We speak today to John Lewins, who's the CEO of K92 Mining. Great conversation, learned a lot about doing business in Papua New Guinea. And if you want to hear more about my thoughts and opinions on that conversation and the company itself, you can go to cruxinvestor.com/club, where you can also get company reports, analysis from experts from all around the world, market commentary from us on the macro, on various commodities. And there's also a thriving community of investors in there sharing their thoughts and ideas. And if you try now, there's a 7-day free trial. And of course, we'd love your feedback too. So do press the like button and leave your comments below. And then you can also look in the description at some of the topics we discuss. Anything interesting in particular, click the number beside that topic. It's called a timestamp. I'll jump you through to that part of the interview. And if you could also click the subscription button to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. John, how are you doing, sir?
Good, thanks today.
Good. Where are you joining us from?
Perth, Western Australia.
Wonderful. You guys seem to be getting it right with regards to COVID. It's business as usual, I hear, every week, every day.
Business as usual within Western Australia. Just don't try and get in.
No.
We have a hard border.
I've heard. I speak to a lot of boys from Perth each day, and they seem to be very, very strong on that. But I'm glad to hear it's business as usual there. But we're here today to talk about K92 Mining. So it's the first time we've spoken about this, and first time this audience will have heard this story. So can we just kick off, John, with a sort of 1-minute overview of the business, and then we can sort of get stuck into it.
Okay, so we are a high-grade underground gold producer located in PNG. Current production around 100,000 ounces a year gold equivalent. Next year looking at around 140,000. Just completed a PEA which shows that we'll grow that to in excess of 300,000 ounces within the next 3 years by increasing our throughput from current 300,000 tons per annum to about 1 million tons per annum. We are among the lowest cost producers in the world today, and with the expansion it actually sees us reduce our costs even further. So with the expansion, I think we come into something below $500 an ounce gold equivalent. And cash costs, ridiculously low. So we're really developing a tier 1 asset. Third highest grade resource, underground resource in the world today on the listed companies. And we've probably drilled about 20% of the high grade veins within our mining lease. So we've still got a long way to go in terms of the potential of the mining lease itself. And then surrounding that, we've got 700 square kilometers of land package, which is got a lot of potential in terms of not only high-grade vein systems such as we're mining, but also porphyries. And we've achieved a lot of what we've achieved basically from our own cash flow, and the expansion project we're looking at would be funded from our own cash flow.
Fantastic. Thanks, John. Appreciate that. Now, if I look back to my banking days, whenever someone mentions sort of Philippines, Indonesia, the whole Southeast Asia, we got nervous. It was hard for us to get the checkbook out and write a check for 100, 250, 500 million bucks to get things going, because you needed a local partner. If you didn't, you knew you were coming against some strong headwinds. How on earth and why on earth did you guys go into Papua New Guinea?
Okay, so the mine that we have was originally built by a company called Highlands. Highlands then sold it to Barrick. Barrick bought it for over $140 million US. And they bought it primarily for the exploration potential of that I spoke about, which was porphyry, copper, gold. That was their big target. Not so much the Kainantu mine, which is a relatively small mine at the time, less than 200,000 tons per annum, and only producing 50, 60,000 ounces. Barrick put it on care and maintenance in into sort of 2008, GFC and all the rest of it. Continued with some of the exploration. And then in 2014, they made a strategic decision. I think that was that they were getting out of PNG. They sold 50% of their interest in Porgera, and they sold Kainantu. We bought Kainantu, an upfront payment of $2 million and a contingent payment of up to $60 million, dependent on how many ounces we produced and discovered. That 60 million we crystallized into a one-off payment of 12.5 million last year, so we paid that off. So there is no more outstanding in terms of Barrick. So we acquired the asset. It had been on care and maintenance for 7 years or thereabouts. We first of all refurbished it and then started bringing it back into production. Now, the asset had been mining what they called the Rumafimpa ore body, which is quite a challenging ore body. Although it was relatively high grade, it was narrow, some geotechnical issues and all the rest of it. Where we saw the potential was the second ore body, which was about 500 or 600 meters along strike, called Kora. Now, Kora had a resource of 1.6 million ounces, a bit over 7 gram per ton gold, and a bit over 2% copper. So overall, around 10, 11 grams per ton gold equivalent. 2 veins, 3 to 6 meters wide each. Very good continuity of mineralization. Geotechnically very good. Great for mining as well, because wider than you were seeing at the Rumafimpa. So that was our target. But initially, some of our funding was a gold loan, so we had to get in and start producing gold out of a Rumafimpa while we set ourselves up to get out to Kora. Now, when we came in and we reviewed all of the geology, we actually came to the conclusion that there was a very good chance that Kora actually extended 500-600 meters further to the north, and in fact came basically that it almost joined, if you like, to Rumafimpa, and there was a change between one deposit and the other. In April, May 2017, we tested that hypothesis by drilling from underground, 200 meters. Geos predicted if we were correct and our hypothesis was correct, at 200 meters, we would hit one of the Kora veins. At almost exactly 200 meters, geologists sometimes get it right, we hit over 5 meters at over 11 grams per ton and over 1% copper. Clearly, we had hit Kora, not a Rumafimpa, even though it was right next to a Rumafimpa. It was a wider vein, contained copper, which Rumafimpa didn't contain. We put a crosscut out to that, a drift out to that vein system, and we continued drilling while we were putting that crosscut in. And in October 2017, we took out a bulk sample, 2,000 tons, put it through the plant. We got over 90% gold recovery, 90% copper recovery. And by the time we'd done that, we'd already drilled a year of resource ahead of ourselves. So we committed to developing Kora. And by the end of January 2018, 4 months after taking a bulk sample, we declared commercial production on Kora. And we have only mined Kora since then. And so what you've seen is a growth in what we're doing. 2018, 47,000 ounces gold equivalent. 2019, 82,000 ounces gold equivalent. This year, we've withdrawn guidance that was a bit over 100,000 ounces due to COVID. Anticipate at this point in time around 100,000, 140,000 ounces in next year. And we've done all of that basically from cash flow that we've been generating from the asset.
So what did you think you were getting into? I mean, you can't have known it was going to be this good. So what did you walk into with $2 million and the promise of another 60 if it all went well? Was it just like another junior mining story?
It was a challenge. It would be fair to say it was a challenge. I came in after we'd done the deal with Barrick, initially as the chief operating officer, actually initially as a consultant because we didn't have any money. We'd done the deal and now we were financing. I actually spent the first 9 months as a consultant in country every month. Gave K92 50% of my time at no cost, on the basis that when we got listed, I'd be paid in shares because I thought that the asset was that good.
Wow. You had confidence. What's that based on? On what data?
That was based on the data that was available from Barrick, Kora, primarily. I thought Rumafimpa, tough gig underground, good deposit to mine from surface, as an open pit, tough gig underground. Kora, on the other hand, it's just when you're mining underground, you want continuity and you want thickness and you want decent geotech, and it had all of those things. So that's what I thought. And then, of course, you had all this exploration ground around you, which was what Barrick were really interested in. But just that Kora, to me, was the primary asset you had to get into. And now, of course, we've gone from Kora being 1.6 million ounces inferred. Now, the greater Kora, which is Kora North, Uatompi, Kora, we've combined it now into one from the work that we've done. We've now taken it to 3.7 million ounces inferred, 1.1 million ounces measured and indicated. And we've also depleted it by 200,000 ounces while we're doing that. So overall, we add the two together, you get to that 5 million. And right now, every hole that we drilled at depth, we keep hitting it. So we don't know how deep it goes. To the south, we're currently drilling to take it to the edge of the mining lease. We know that on the surface, there is a surface expression that has got artisanal workings on it for another kilometer until it reaches what's believed to be the source. So you've drilled half of the strike length that you know of, 1 of 2 kilometers. You've currently got a vertical extent of 1,000 meters, and we don't know how deep it goes. And remember, this is an underground mine that you go up into. This is not an underground mine where you go down, because it's mountain and we're coming into the side of a mountain. You're actually going up. So when we talk about at depth, 1,100 meters below the surface is actually at the same level as the portal. So we haven't yet got to the point where we're actually going down, if you like.
That's fine. Okay, that's really interesting. I mean, you must obviously you're delighted with that, and 1.6 billion market cap today. You've got that right. But talk to me about Papua New Guinea. In terms of you are starting to throw off a lot of cash, a lot of free cash flow now. You will continue to throw off the free cash flow, certainly at today's prices. You've got a very low AISC and all in cash costs, very, very low. What are the conversations with the government about? Because sometimes where you see this in Africa, people look at the revenues, they kind of start getting a bit interested in what you're producing and perhaps start trying to get involved. So with regards to taxes, with regards to royalties, with regards to licenses and permits, has it been all plain sailing so far?
Look, it would be fair to say that we've got a really good relationship with the government. First off, we've taken an asset that never made any money. And we've gone in and we've actually turned it around to the extent that we paid our first corporate tax in July. I actually met with the commissioner, the new commissioner of the IRC, not long before COVID hit, and said, listen, just wanted to have this meeting to flag that we believe we're going to be paying corporate tax this year. And when I helped him pick himself up off the floor, he said, but you're new people here. You're not on our radar. And I said, well, we believe we're going to be paying tax this year. We've done our numbers. And he named a couple of other mines that have been there quite a lot longer than us and said, well, that means you'll have paid more tax than them. And we've now paid our first ever corporate tax. We are, as you mentioned, we're kicking off a fair amount of cash. When you look at the government in PNG, it's 45 years independent, never had a coup. It's a government, Westminster style, 111 members of parliament. You never have a majority government because it is such an incredibly diverse country. 8.5 million people, 850 languages, and a bit over 200,000 taxpayers.
Right.
So it's the vast majority of people subsistence farmers. And that's really important when you're dealing with your communities to understand subsistence farmers. Land is everything. In PNG, land is everything. So first off, you've got communities that you need to deal with, and you need to deal with in a respectful way and understand this is their land and it is important to them. And just because he's not farming where you want to be today doesn't mean he won't be at some point, because that's the way in which they farm. They rotate and move into different areas. You've got to be respectful for that. System in PNG, every mine has to have an MOA, a memorandum of agreement, with the local communities, local level government, provincial government, state government, and the company, administered by the MRA, the Mineral Resources Authority. And in that, everyone's got commitments that they're making, not just the company, but others. So the government is doing things to facilitate. Obviously, the main one is what the company is going to do in terms of employment, procurement, all those things. Royalty, unusual. PNG, one of the few countries in the world where the majority of royalty goes to the communities, not to the government. So if you look at ours, 70% of the royalty is actually paid to local communities. 30%, I think, goes to local level government, provincial government. So quite unusual in that context as well. Relatively low, it's a 2% royalty. We believe it will be increased, and we don't think that's necessarily a bad thing. 2% is at the low end of royalty. In terms of corporate tax, 30% corporate tax. So relatively straightforward in that context. Certainly the government, like many other governments, is continuing to look at, what is our cut? And the PM, the new PM who came in last year, has been quite clear. The government believe that they should get 50% of net cash flow. And if you look around the world, you look at Australia and all the rest of it, that is about the figure that if you're in Australia, that's what you're paying. And certainly with our corporate tax, with your royalty, and then of course, obviously we employ a lot of people. We currently have about 900 employees and contractors. That's including all of our exploration, which is quite a lot.
But are they local? Are those local people?
95% of those PNG nationals, a bit over 95%. 65% are actually from our local communities, many of whom never had a formal job before, never mind worked in a mine. Lowest percentage of expats of any of the mines. We are an underground operation. We need to have a very heavy commitment in terms of training, safety, et cetera, in order to be able to obviously operate successfully. We believe we've been very, very successful to date at that. We've had one lost time injury in 4 years. We've got the best safety record in PNG and one of the best in Australasia. All of those people pay tax in PNG, including the expats. You fly in, fly out, but you are paying tax in PNG. So
right. So the government's obviously quite pleased with the fact that you're actually starting to throw off cash. You're paying tax now, which is great. It's kind of unusual, the paying it locally, or the bulk of it locally rather than at a federal level. But great for your local community. Can I just talk about what the goals are here? Because obviously, I say $1.6 billion operation. You're starting to throw some cash. Now that brings its own problems. The problems being that you've got to be able to continue talking about a growth story here. So where does that come from?
Look, the growth comes from, first of all, we're going to stage 3. Stage 3 is 1 million tons per annum, which produces over 300,000 ounces a year, sub $500 an ounce, all in sustaining cost. So one of the lowest costs in the world. Stage 3 capex, 125 million. It's spent during 21, 22, and 23. All of that comes from our cash flow. We're still actually kicking off free cash while we're building this project and while we're putting in all of our sustaining capital and while we're doing all of our exploration. Now that's based on the PEA, which we finished in July. We're busy now with a full-blown feasibility study. But we've already committed to the twin incline. So we're already developing a twin incline. It's about $40 million. That isn't part of the capex I refer to, but it is part of our sustaining capital now. We're busy right now, 4 rigs underground, expanding the resource and increasing the amount of measured and indicated that we've got. So by the time we finish the feasibility study, the resource will be larger. There's no two ways about it. We've already drilled holes that are outside of that resource from underground, and the mineralization has continued, and we've reported some very, very good intersections quite recently. Parallel vein systems to Kora. We've got Judd, which sits about 200 meters to the northeast. It's got almost no drilling in it. It's got a few holes only. It is known to have a strike extent of over 2 kilometers. The few holes that were put in it were, in the main part, intersected it as they were targeting deep Kora. Barrick's best hole, 3 meters, 278 grams per ton. Highlands, about 100, 150 meters below that, 9 meters at 8 point something gram per ton, 1% copper. So we know it's got very good mineralization. What we don't know is, does it have the continuity, because we haven't drilled it. But recently, just last week or the week before, we've developed a long Judd underground, over 100 meters. And so this is obviously quite far to the north, so it's 500 meters away from that intersection that I referred to as Barrick's, and about probably 700 meters deeper. We've pulled out the equivalent 5.5 grams per ton over 100 meters. So we now know that Judd does have grade and does have continuity. We haven't yet done drilling from underground because all of our focus, 4 rigs underground, has been on Kora. And so we've now got another rig coming in, and we will be drilling Judd as early as next quarter. And so we'll be looking at the potential for Judd to come into the picture. And remember that right now, our underground development is taking material out of Judd. So it's not like, okay, so where is it? It's actually sitting there parallel to Kora, and all of our underground development is sitting in between. You go this way, you go to Kora. You go this way, you go to Judd. So that has a significant potential to expand. That's just within our mining lease. You go outside of that and you're now into the porphyry areas, and there we've had some early success in drilling of our first porphyry target, which is Blue Lake, and we've got a second program starting this coming quarter. 2 brand new rigs we've just brought in. We're busy commissioning those over the next couple of weeks, and they'll then go into drilling our second program at Blue Lake.
Fantastic. Porphyry. So it sounds like you've got the cash you need to be able to expand the resource. You're hitting high grade intercepts along the way. You've gonna have some free cash flow even after financing this, and you will continue at today's rates to build up that cash reserve. What do you do with that cash? What are the options for you? You've got one asset at the moment. So people would like, okay, Papua New Guinea, I understand a little bit better. You're obviously got a fantastic asset there and a lot of targets and a huge land package. But it's a single, people will view it potentially as a single asset. So that's a slightly higher risk component if something goes wrong down the line. So how are you getting yourself out of that?
Well, that's exactly right. I mean, it is a single asset. And so part of our strategy on the M&A side is that we are actively looking for opportunities. We've increased our team specifically to be able to properly evaluate opportunities. Target areas are Australasia. We have a strong background in Australasia. North America, we've got a strong background in North America as well. And then Asia Pacific, where again, many of us have operated. So that is our primary focus area that we're looking at. Outside of there as well, but primarily in there. We're evaluating quite a number of projects right now. And the sort of project that we're looking for really is 100,000 ounces plus per annum, ideally with a relatively long life. We do have, we think, something of a window of opportunity in the stage 2 expansion, which we're just commissioning the plant right now. That takes us to the 140,000 ounces next year. It's another 2 years later that you then get into your stage 3, 300,000 plus ounces. So you've got that window of opportunity, if you like, and that's something that we're looking at, that we think we can bring something in that would enable us to get a step up between one and the other, and then perhaps by the time you get to stage 3, you're not looking to take something to 350,000 ounces. You're taking it as a company to a 500,000 ounce company with multiple assets, which obviously means that you get better valuation and multiples, et cetera, as a multi-asset company.
Right, but you've got the balance sheet, you've got the cash and building up more cash, and you've got the credibility. But in today's environment, Australian gold companies, 100,000 ounces, you're going to pay through the nose, aren't you?
If you want to go and buy a mine that's producing 100,000 ounces, you're going to pay through the nose. That doesn't mean that there aren't opportunities. I think to us, the opportunities are more in your advanced exploration, where people have completed a pre-feasibility study and are then looking to take the step of going into production. You're still in a situation where the market doesn't value those anywhere near as highly, number one. And number two, obtaining finance is still a challenge. And many companies don't have the track record, whereas we can come in, we've already got banks offering us money. So we can certainly access additional funds if we want additional funds to be able to bring those projects into production. So we're being very selective at what we're looking for, and we're not looking to compete with many of the larger companies now, for instance, in Australia. And if you actually look in Australia, what you'll see is that those intermediates that were there, perhaps looking for that 100,000 ounce project, aren't there right now. They've gone offshore, number one, in some cases, as you would have seen, several of them. They're looking for immediate production, and they're looking to be the 1 million ounce plus producer. And so that actually has left something of a vacuum in that particular area. Yes, you do have other players in there, but many of those other players do not have the balance sheet that we have and don't have the market cap that we have, et cetera, et cetera. So there are some opportunities, we think, in there. But at the end of the day, we're not interested in going out and paying the NPV of an asset to acquire it. That is value destructive.
Okay, so what are you looking for? Because, and again, I understand you're going to be in no rush, because right now, where your share price is moving like it's moving, people aren't going to complain too much. And obviously I don't think you probably even need to be thinking about dividends at this time, because the share price is moving nice and steadily, certainly has over the last 2 years. But what are the transferable skills from the process you've been through in Papua New Guinea? Because you came in with, and you were handed over a shed load of data with targets going forward. Does that give you a sort of sense of precisely what you're looking for? And have you seen anything that's come close?
It's difficult for anything to get close to Kainantu. First of all, I have to say, it really is quite an exceptional project and deposit in terms of Kora. And anything that we do cannot take our focus away from phase 3 and also realizing the value of that asset. That's an important point. When you look at technical strengths, underground operations, we've got a very, very strong underground technical team. And so we have a strong ability to look at that side of things. We've got a team of people who've been involved in developing many mines. Personally, I've built 3 gold mines in Australia. One of the largest underground lead zinc mines in Australia at MacArthur River, I built that. And I've built in the former Soviet Union, South Africa, et cetera, but I'm not the only one in the organization that's done that. So we've got a background of actually building projects, not just running projects and not just acquiring them, but actually building them as well. And that is a more specialized skill. Everyone thinks it's relatively easy to build a mine. Actually, there's a bit to it. There is actually, strangely enough, a little bit to it. And not everyone gets the opportunity to do it. It's an exciting time, but it's also a challenging time, especially for a junior, because you never, ever just about have all the money that you really need to build that project. So you end up building it not quite as well as it could be, and then you've got to generate some money and then make those improvements. We've got the opportunity to come in and actually build it the way it should be built. And so that's certainly something that we can bring to the party, if you like.
So to that point, I know I argue the point that single asset companies usually get marked down, but given the size and the scale and the grade and the cash flowing and the fact that you're driving share price and market cap, do you think you've kind of got a pink ticket on trying to do this M&A for a while? Because, well, let me ask you this: how long do you think this gold bull market is going to last? How long is this window?
Yeah, this is a very interesting question. I guess, personally, I can certainly see that we'll be well into next year with this general bull market. We've obviously got the North American, the US election, which will undoubtedly throw up numerous issues, shall we say, and uncertainties and all the rest of it. And then, of course, we'll have the time period between the election and when a new president actually gets to go in, or the existing president gets to stay. If it's a new president, that could be quite a long time, given that we're not going to accept all these postal votes, which are all So I think the bottom line is there's a fair bit of political uncertainty. Certainly, a lot of the tensions between the US and China are going to continue, and no new president is going to step back from many of the things that have been done there. So that's going to continue. So there are quite a number of drivers that you can see that will certainly underpin a strong gold price, I think, going forward. Plus, we've got COVID, and we've got the impact that COVID has had around the world, and that is not going away this year. Yes, vaccine is coming, but when will that vaccine be out? So, and even when it is out, then we're in recovery. And, with everything that's been done there, again, it supports a relatively strong gold price. And you've got all the other things that are going on with exploration is the area that's been hit more than production from COVID. In a lot of countries, even for us, we're busy with exploration, but we've cut back on the exploration we're doing because you're interacting with communities wherever you go, and it's far harder to control what you're doing. And I know that a lot of places in South America and other areas and in Africa dealing with the same issues. So we've got that cutback in exploration that's going on as well, and that's sort of supported. In terms of having a pink ticket, yeah, you're right. We don't need to rush and do anything right now, and we're not going to rush and do anything.
That's exactly what I'm asking you. about is because if you've got a sense of how long this bull market lasts, because everything's going to cost a little bit more, but when the sheen comes off, as it always does, down the other side of that curve are some deals to be had, because people have kind of exceeded themselves. They have raised and expensive money. They've stretched themselves to a point where they perhaps shouldn't have and can't get out of it. So do you think it's better for you to wait, given, things have gone well for you in the last 2 years on many fronts. So do you think you've got that room to wait? But to me, it feels like you do. But what are you and the board talking about when you talk about M&A?
We certainly don't think that it's something we need to rush into. We do have a number of exploration projects that we're working on, which will certainly provide ongoing results. By the end of the year, we're going to be running 10 rigs on at least four different projects. So I think to date, our cost of adding an ounce is about $5. So we've been able to add ounces to our resource at a very, very low cost. And we think we can continue to do that with what we've got there. So there isn't an imperative that says we really must do something quickly. And we're not treating it that way at all. We're looking at, as we see it, special circumstances, opportunities, and one of the things that we think we can bring to the party in talking to people is that, look, this is a company that, yes, we've got a share price that's performed really well, but look at all these things that are happening for us. If you're going to come in and be part of K92, then you can be part of that ride, if you like, and there is a lot more value in our share price just from Kainantu, without having anything else come in.
Okay, so I talked earlier about some of the problems of becoming a big company, which you are now, is when you are starting to throw off cash. Cash is just cash. A dollar is a dollar. You've got to create value for that dollar. Okay, so it's nice having it, but people have got expectations of you generating value for them. So M&A is one route. We've just discussed, pros and cons. You've got optionality, and you'll choose when you move forward on that front. With the dollars that you do have, you think your current plan of developing out the kind of stage 3 growth and obviously you've got a tier 1 underground asset there, fairly, like I say, low cost. But do you think that's the best use of the dollars that you are creating, or is it building out the resource? What's the business model look like for you?
The business model is actually twofold. One, yes, you do your expansion because it generates a lot of cash. At the same time, you've got, like I said, 9-10 rigs operating. You are expanding your resource. And the project that we're building, one of the things that we're doing, the twin incline that's going in, right now the PEA says 1 million tons per annum. That's the project, 315,000 ounces a year. The twin incline is a 6x6 and a 5x5. It'll do 3 million tons per annum. Now, it costs us a bit more to put that in, but if you want to come back and you put it in as a 5x5 and a 4x4, and you can get your 1 million tons out of it, and you say, well, actually now Judd's come up, and you know what? There's another 500,000 ounces a year coming out of Judd. And Karempe is also looking pretty good, and there's a bit more coming out of there. And that extra kilometre that we went down along to the south, that's come in, and you know what? There's another 1 million ounces, another 1 million tons a year coming out of there. Now you've got a challenge. For us, we've said, look, we know that we've got more ounces underground. We've got more ounces on this mining lease than we think, and we've got more ounces to the south. So we've got to allow for that. And and the cost of that optionality is small. So that's one thing that you're doing right now. You're building a project right now that's 1 million tons per annum, but you're building it in such a way that you could double it. So long and short of it. We've also got a 400,000 ton per annum plant that we've just expanded. That when this 1 million ton per annum project comes in, we've got 400,000 ton per annum plant that's sitting there that's going to be available to take from Judd or to take additional ounces from Kora. And the PEA is not optimized. The PEA ran on a cutoff grade of 5.5. That left 4 million tons, 4 grams per ton, that doesn't come into the system yet. Just happens to be 10 years at 400,000 tons per annum and adds another 50,000 ounces a year to your production. And I haven't even gone to Maniape and Arakompa, which have historical resources of 1.5 million ounces down to only 200 meters and are actually closer to where the plant is than Kora. Haven't been drilled for 20 years. And so it's a historical resource. It's not been mined. It's just historical resource. And we're scheduled to be drilling those areas over the next 12 months as well.
Okay. So you bought this from Barrick. They must be looking back and going, well, I know we sold it for different reasons. But right now, you must look appealing again. This must be very appealing to them. But the question would be, are you too expensive?
Look,
that's assuming that's your end game, John, because maybe just tell us what is the end game here?
If you look 2 years ago at our share price, I mean, the share price 2 years ago was $1, thereabouts.
Yeah, that's about right.
And our big concern was that we could see the potential of Kora. And we knew that certain people in PNG, I mean, they were, interested in what we're doing, asking for visits, et cetera, and we felt that certain elements within our industry could see the potential of Kora. And our big concern was that the market cap, the share price, didn't reflect what we believed was the potential of Kora. And so for 2 years, our focus has been on trying to bring that value to the table so that the market could see it. And so that should anything happen, our shareholders weren't going to be sitting at $1 and somebody come up and say, listen, here's $2, we'll take you out. And many of those guys would have said, well, that's 100% return. That's pretty good. Okay, I'll take that. Where we're busy saying, listen, give us the time. And it's not 2, it's 4 or 6, or it's now 8. And so a big focus for us on this last 2 years has been trying to make sure we bring all that value and we bring it to the market and get it recognized by the market so that it protects our shareholders. And I think we've done that very successfully over that time period. Are we expensive? I think with what we've got going on right now, I think we've got a long way to go in terms of share price, market cap. So we just got to keep bringing ounces to the table, which is value to the table. And those are, remember, we're not adding, 100 million tons at 0.8 gram per ton and saying, well, look how many millions of ounces we've got. We're bringing ounces to the table that are averaging closer to 10 grams per ton. And so they are value ounces.
Grade is king, and you've demonstrated that, because we hear that a lot. We get a lot of people going, we're undervalued, we're going to keep building value for our shareholders, but you've done it. The last 2 years have been an example of how you do it. The grade has helped, obviously, in this gold environment. Really has helped in recent months. But look, John, thank you very much for that first run through. That's fantastic to hear that story and how you've gone about doing it and how you want to continue delivering that. Do stay in touch and let us know how you get on, because obviously you've got a few things coming up for the end of the year. I'd love to hear how those drill bits are getting on too.
Yeah, I'm looking every day.
I bet you are.
Because, if there's one thing I'd say, it's this, if you've got two resources, you've got yourself a good resource in the ground, you can be a good mine, you can be a good company. If you can add to that a good resource out of the ground, and that's your people, then you can be a great company. And right now we've got that second resource as well. And that is really what makes us. Yes, we've got the great resource in the ground, but we've got the great resource out of the ground that's helped bring that to the table. And it's that combination of those two things, especially if you're in a country like PNG, where it is more challenging than many other countries. And that has been, I think, our greatest success in many ways.
Beautiful. John, thank you for your time today. We'll speak to you again soon.
Okay.
Good.
Thanks for that.
Brilliant, John. Thank you.